You tuned into the Millennial Investor Show with Wandile Boitumelo.
Good afternoon, Brand Live listeners. Today we're joined by a special guest, and thank you for joining us today. I was thinking of a way to introduce our guest, and the only appropriate nickname I had for you, Vusi, was the Slasher, because one can't just introduce you and say Vusi the entrepreneur. One has to say Vusi the entrepreneur / the venture capitalist / the public speaker. So thank you so much for joining us. So both my co-host and I read through the radio book, and we were so impressed on the knowledge you shared with us, and we just had to ask you to come join us on the show. So we just want to start. When you introduced the book, you mentioned that the rate of wealth accumulation by those that understand and know financial assets is widening. Yeah. And that is obviously contributing to some of the problems we experience in society where there's very low financial literacy standards. And financial technology is obviously trying to cover that gap. So what do you think is obviously contributing to that problem?
It's information asymmetry. That's all it is. I think, so you have to remember that we've gone from, if you study the rate of let's put it this way, if you study the nature of economic evolution in the world, economic evolution has various tenets and takes different forms. So when we first started with the first industrial revolution, fueled predominantly in what is today known as Great Britain, then it was just Britain, then they decided they wanted to be great, so they called themselves Great Britain. By the way, people often don't know that there's a difference between England, the United Kingdom, and Britain. England is England. Britain includes Scotland and Ireland, and the United Kingdom. The United Kingdom is England. Britain is England, Scotland, Ireland, as well as the Channel Islands. Yeah. Right. So that's the main difference. But if you look specifically at England, where the first industrial revolution started, it was fueled by coal-fired technology, which fueled the steam engine. Yeah. And that birthed what we know as the industrial age. To accumulate wealth in that space, you needed, as we know them in economics, the three factors of production: land, labor, and capital. Right. So everybody who goes to school is still taught about the world of land, labor, and capital. What young people today are not taught is that of the three factors of production, one's dead, the other is dying, and the third is changing. The dead one is land, and which for me is a fascinating conversation when we talk about wanting to take the land, because the land is no longer an indicator of wealth. We looked at the numbers, by the way, and I know I'm coming to answering your question, but it's important to give the background. Yeah. We looked at the numbers. Until the year 1889, 90% of global wealth sat in land. 90%. 90%. And the rate at which the asset value of land grows has been going beyond inflation, above inflation since then. Yet today, it's less than 4%. So the question people have got to ask themselves is, where does this new 96% come from? Yeah. And where that new 96% comes from is understanding the institution of capital. Yeah. Now, in the old day, capital was having access to resources. Today, capital is about knowing where to find the resources. That's the thing with this information asymmetry, right? So if I don't know that there is a stock market, I can't participate. Yeah. When I know there is a stock market and I don't know that there's derivatives or that there is something called shorting, I don't know that without actually owning a stock, I can participate in the market. Yeah. So the reason you're finding people who have access to financial assets accumulating wealth beyond people who are not included in the system is because people who have access to financial assets can leverage on things they don't own. And if I can... what's this fellow's name? Christo Visa, the guy who lost half his money and kept 100% of his wife. So Christo Visa, for instance, he owns some stock at ShopRite. Yeah. He leverages his ShopRite stock to buy shares at Steinhoff. So he raises a couple of billion rand in debt, but he makes a couple of tens of billion in earnings, and he becomes a multi-billionaire, right? Yeah. He leveraged the ShopRite stock to take Steinhoff shares, which is to say he didn't have the money to own the Steinhoff shares. Yeah. So the reason why people who have access to this information about knowledge economies, specifically use it in the financial assets, is because they know that it's information asymmetry. If I don't know, then I don't even know to participate. And then, therefore, I'm still using this idea of land, labor, and capital, that I must work 8 hours a day at this place, get paid this much for this purpose, so I can accumulate wealth. And remember, income isn't wealth. That's why you're seeing this that dispersion.
Well, you ask you state something very interesting in the book, right?
Yeah.
You say 8 of the wealthiest people on earth
Yeah.
own more wealth than the bottom 48%
Yeah.
of the world's population,
Yeah.
which is a clear indication that there's a gap between the rich and poor that's widening,
Yeah.
right?
Yeah.
Should we be concerned, and what should our role as business leaders be to
man.
merge that gap?
I want to make it even worse for you. Last year, Amazon added in new market value the entire market cap of Walmart. And I'm just going to say it again.
Okay.
Walmart, the world's largest retailer, last year, in a single year, Amazon, which has 4 shops, guys, 4.
Only
Marco.
4.
You get, like, they sell stuff online, right?
Yes.
Amazon, which has 4 shops, added in market value, right, the same amount as is the entire market cap of all of Walmart, which employs tens of thousands of people around the world. So the answer to your question is, should we be concerned? Absolutely, because that is not sustainable. I mean, Thomas Piketty talks about it. I mean, today it's kind of a known fact. It's just not sustainable to have that kind of distribution of incomes. You see it in South Africa, right?
Yeah,
I
that's
mean,
so true.
kind of guys, we have Dainfern and Diepsloot, like
Right next to each other.
3 minutes
True.
apart.
True.
Right. And I say this to all my friends who live in Dainfern. I go, there is a point where the masses will be at such a number that it doesn't matter how high you make that wall. And it doesn't matter how much voltage you run through it. Right? Because so we do have to worry about this distribution of wealth and certainly this distribution of incomes. What should business leaders be doing? That's a deep question. And for me, what makes me sad is the way business leaders are having the conversation is still very much about short-term shareholder value, and it's fairly deterministic. Now, if we had the conversation earlier about information asymmetry and the fact that people don't know to participate in these markets, that means that the global majority is not the shareholder, because it's not buying the shares.
Yeah, that's true.
So the business leader who's worried about their shareholder is ergo not worried about the global majority, right? The other problem you've got is business leaders, and it's a global trend. CEOs today get hired for five-year terms.
Yeah.
CEO comes in for 5 years. After 5 years, he leaves.
Gone.
And we know when we track economic cycles and stock market cycles that they typically take between 12 to 20 years. So the CEO never sees through a cycle. He's always there for a spot.
A quarter of the cycle.
That's right. And they say to him, if you take share price from price X to price Y, we're going to reward you for the share price growth. So he takes share price from price X to price Y. And how does he do it? Well, it depends. You know, if he's African bank, he issues loans to people he shouldn't be issuing loans to. He knows he can't afford it. But remember, the valuation or his performance valuation is credit book growth. It's not about market inclusion.
And I'm glad you actually mentioned that, because you talk about, in the book, you talk about that. So basically what's happening is the Magna Carta focuses a lot on human capital. It focuses a lot on motivating your employees and everything. And if you look at artificial intelligence coming in, it sort of replaces that human capital sort of element. So now how does an entrepreneur balance between the two? Because the biggest problem in SA, we don't have the right policies to guide the transition. I mean, it doesn't stop any company from telling their workers today that, guys, you're going to be here for the next 3 months. In the next 3 months, we're going to get artificial laptops or artificial intelligence come do your work. There's nothing stopping that. So how does the Magna Carta obviously guide that transition? Because it's a very great book. You guide, you talk about those sort of things.
You know, we're busy working on a project now, which I hope will become the next book. And we'll probably call it something like Africa Back to Black. And what I'm going to argue actually is that Africa is going back to being the dark continent. And it sounds and I hope the research is wrong, because that's what the research is showing us. It sounds incredibly opaque, almost overtly negative. But I'm battling to find the green shoots and the nodes of light that we can go. Africa can peg its competitive advantage over the next century on these things and these things and these things and these things.
Yeah.
We know for the Asian tigers, the Malaysian economies, we know for them that they're hedging their competitive advantage on technological advancement.
Yeah.
So the US is kind of trying to do the same thing. It's lagging a bit, but it's doing its bit.
They're catching up.
We know that for the Western Europe, it's about access to the ecosystem of capital. So the entire global capital center of the world sits in Western Europe.
Yeah.
Eastern Europe, we're not sure yet. I mean, ask Vladimir, we'll see what he says. Latin America, similar to us, hasn't yet had a conversation about what's the role we're going to play in shaping the world of the future. So to your question about artificial intelligence. Coincidentally, I'm incredibly excited about artificial intelligence, and I'll tell you why. Because I think for too long, we've been teaching human beings to think as robots. Let's think about it.
Yeah, that's true.
Why is a workday 8 to 5?
Yeah, actually.
Who said 8 until 5? You know who said it? The factory manager. Because the factory manager had to make a phone.
Yeah.
And to make a phone, he needed a certain number of output. And to get the number of output, he needed you to work 8 hours a day.
Yeah, that's
so he
true.
said, you're going to come in at 8, you're going to leave at 5, you're going to take an hour lunch between 12 and 1.
Yeah.
Right?
Yeah.
And I own your time.
Yeah.
Oh, what you do after that is
It's out of my
beyond me.
business.
So what went in? You went to work, you stood at the production line, and somebody made a piece of the phone, and it came to you, and you put in your bit, and then the next guy, and then the next. That kind of rote work, we will never be able to beat machines at.
Yeah.
I'll tell you why. Because if I have to teach you how to do something, I send you on a 2-week course.
Yeah.
I teach a machine, I do a software update.
Yeah, that's
Click
true.
Update, Wi-Fi, finished.
Update done.
It's done, right? But for me, the exciting bit, and this is why I'm excited about artificial intelligence allows us finally the opportunity to be creative, which is what human beings are.
Yeah, that's
the
true.
problem is that schools haven't been teaching human beings to be creative.
Yeah,
True.
definitely.
Guys, they have a start time and an end time to school.
That's
Classes
true.
take a certain time. We've been teaching learners and young people to think and function as robots.
Yeah.
So I think rather than teach young people how to put together a mathematical BODMAS equation or an algebraic equation, you're going to have to teach them about creativity
Yeah.
and teamwork
and actually-
collaboration,
Yeah.
real human qualities that they can use in the real world. Because you will never be able to be more efficient than a machine, but you can certainly be more. A machine will never be able to be as creative as you.
No, that's true. And it actually reminds me of a concept my friend and I were talking about the other day. Basically, it's called the extinction of the poor.
Right.
Sort of thing. If you now sort of replace human beings and human capital with these with artificial intelligence, where are you taking these people? You're retrenching, and not everyone has developed that ability to think or to learn. Because I think the biggest thing you need as an individual is ability to learn.
Yeah.
The ability to adapt to change.
Yeah.
So how's that going to affect the people that don't know how to learn?
Yeah, and again, remember, people have not been taught to learn.
Yeah.
I mean, I really pity young people today going to school, and I suppose because having gone to school and then come out of the system, you realize what's wrong with the system.
Yeah.
The system teaches you to retain knowledge. It doesn't teach you to look for new knowledge,
Yeah.
and those are not the same things. It gives you a textbook. It says, learn everything in here, know it, and I'm going to ask you what's in here. It doesn't say to you, we're going to teach about the subject called mathematics. Why don't you find out what is mathematics in the first place?
Yeah.
What is its genesis? And why is mathematics important in how humanity functions?
Yeah.
It doesn't say that to you.
Yeah.
It gives you the information, and your job is to retain it, not to interpret and not to find. In the new economies,
Yeah.
it's going to be about, can you find new knowledge or manufacture new knowledge? And that's going to be the competitive advantage.
Oh, that's great. And you also talk about in the book that transition of an entrepreneur. So you start off as a startup. You can personalize your service for your employees.
Yeah.
Even talk about missing your son's game and all
Yeah.
that,
Yeah.
because you want to make your client or your customer happy.
Yeah.
And then you start growing as a company. You start hiring more people.
Yeah.
And then now that problem comes in where the principles you built the company on aren't transferred properly to the next person.
Yeah.
And you talk about how you have to obviously guide transparency to ensure that those principles are filtered through the different divisions of the company.
Yeah.
So what else can you tell us about that regarding managing complexity and staying agile?
Yeah, I mean, I think that's the quintessential challenge of entrepreneurship, right? Is what entrepreneurs have that big businesses don't is proximity. So
Yeah.
the entrepreneur is always closer to the customer than the big business is.
Yeah.
What big business has that the entrepreneur doesn't is scale. So,
Yeah.
when the big business gets the insight, it can land like a thump. It can dig 10 kilometers deep in one day.
Yeah.
The entrepreneurs are still ushange big. He's trying to get into this thing. So the real challenge for entrepreneurs as they switch from being entrepreneurs then to managers, from managers then to leaders, is to understand that as you remove yourself from the process and you move farther and farther away from the customer, you have to build nodes of transparency so that you still know what's going on. And that's very, very hard. It's incredibly difficult. There are examples of where it's been done. Here's what we know about where it's been done. We know that where it's been done, the brand doesn't belong to the customer. It doesn't belong to the organization, it belongs to the customer. And why that's important is because when the customer owns the customer dictates brand direction.
Yeah.
So you don't go to the customer and say, we're doing X. The customer will tell you what they're doing. And often they'll tell you without your permission, right? So they'll buy your car and then they'll lower the suspension.
Yeah, that's true.
They'll put rims on it. What are they telling you? They're telling you, this thing is okay, but I can make it look better.
Yeah,
right?
that's true.
And if you're smart enough a business leader and you're humble enough a business leader, you listen. You know, they'll buy your burger, bese bafaki cheese ngaphakathi, or they'll cut it in half, bafaki archer. They're trying to tell you something, you're just not listening.
Yeah.
So the thing for entrepreneurs, and I watch a lot of entrepreneurs make this mistake as they scale, is scale is incredibly complex, guys.
Yeah.
Like, when you scale everything.
Yeah.
So it means if you had one customer complaint, you now have 100. Because you only had two customers.
Yeah,
now you got
that's true.
200.
Now you got
If you
200.
had one customer complaint, you now have 100. If you're collecting on one customer, you're now collecting on 100. Scale is very complex.
Yeah.
The simplification of scale is about focusing on the things that matter. And I've learned this having built businesses, that actually I'm never going to be on top of everything.
Yeah.
That's a part of the lie. You get this idea that people are on top. No, you're not. It's rubbish.
Yeah.
You just have to be on top of what matters. And you've got to be on top of what matters, and you've got to have around you people you know will be on top of the other stuff.
Yeah.
And that's it. That's as close as you're going to get to it.
Okay, we're going to take a quick ad break and we'll be back in a few.
Live from 27 Boxes in the heart of Melville, this is brandlive.co.za.
Have you ever thought about the power of social media? Social media has the power to make your business grow. Grow! Yeah. Why don't you let us manage your social media? Because our business is to see your business grow. Visit us at www.beastdownmedia.co.za.
In your face, all over the place. We're online 24/7. 24/7. You're listening to the hottest internet station.
Brand Live.
No doubt.
You're listening to brandlive.co.za.
Welcome back to Brand Live Radio. You are currently tuned into the Millennial Investor, and in studio with us is Vusi Thembekwayo, if you just tuned in. And so that brings us to my next question. Vusi, so risk is a huge factor in business, right? And that is probably one of the major considerations that people take into that people think about when making decisions.
Oh, yeah.
Especially management, right?
Oh, yeah.
So in the book, you speak about the fallacy of the perfect time and
Yeah.
the perfect decisions.
Yeah.
Please just explain that to us.
Yeah, so I think, you know what risk is? I mean, having thought about it mathematically, risk is volatility.
Uncertainty.
Yeah. So it's volatility, and in its manifestation is uncertainty.
Mm-hmm.
But so here's what I mean. If I said to you, I'm going to give you R1 and you invest it for me, what kind of returns would you get? And you said, well, if you give me $1, I can get you R2 back, or I can lose your money. That's like 100%. You're either going to give me 100% return or 100% loss. Yeah. If I gave it to you and I said, I'm going to give you $1, what would you do? You said, well, I could get you R1.50, or I could lose half of it. Yeah. In other words, do you see? So he's less risky because he's just less volatile, right? So when people are trying to understand this concept of risk, what they think risk is the unknown. Now, in its manifestation, it's the unknown. But actually what risk is the determinants of volatility. So I say this to people all the time. There is no such thing as risk, because risk is like air. It just is. Yeah. So you can't go, well, I can't take this decision because it's risky. what you need to understand is not taking the decision
It's risky.
is risky, right? So you can't go, well, if I make this decision and it goes this way, yeah, the fact that you're alive means you're already in the system of risk. So for me, the most fascinating relationship people have with risk is this idea that you can choose not to participate. You can't. It's like, I got you appeal. You must breathe. Therefore, there is risk. So I think that's the first thing to say. You ask the question around the perfect time. So people then go, so how do I minimize risk? Then they look for this. I've never found it, but they look for this country called perfect. I'm told in this country, everything works. and everyone, and they're not trying to recall a president. Everything in this country is like perfect. So they look for this little country called perfect, where they'll take the perfect decision that has the perfect implications at the perfect time. Doesn't exist. There is no such thing. What there is the understanding that I am always in the company of risk, and that I will almost always make the wrong decision. Like almost always. You leave here and you go home, you're going to get on the freeway at the wrong time. It's just how it works. You're going to take the off-ramp at the wrong time. You're going to choose to, I don't know if this ever happens to you, it happens to me all the time. You ever switch lanes and the minute you switch lane, the lane you're on doesn't move?
Yeah, that's true. It happens all
You're
the
like,
time.
I watched this lane move for 10 minutes. Now I'm here, it's not going anywhere, right?
That's true.
So you're always going to be taking the wrong decisions, but you always have the opportunity to make the decision perfect. So there's no such thing as the perfect decision, but you can make the decision perfect. And that's the agility part. That's the once I know, I've got to move, I've got to switch. And sorry, just the final note. The reason people are scared of it is because they don't want the responsibility of agility. So they don't want to go move, change again. People want to take a decision and stay with it for 5 years, 10 years, because this is the training. Right?
And then become like a Nokia or something.
Doesn't work that way.
But I think the biggest problem with the risk is obviously, I think there's a correlation between the risk and strategy. So the more focused the strategy is, it's harder for the company to just be agile. So I think that's where it comes in, where the strategy is hard to change. So they just decide to keep going with the flow until they realize it's no longer work.
But you have to remember, this is, strategy isn't planning. And so two things to say. First, strategy isn't plan. And strategy isn't tactics. It's like the simplest mistake people make. Okay. So here's what that means. If I'm Sugalang in Cape Town, right, and I go, what's my strategy to get there? The strategy is sort of like the overarching idea of how I'm going to get there. But it's an idea, which means by its very nature, it must morph. It must be dynamic. The first thing you know, the minute you know something is not a strategy is when it ceases to be dynamic. And the first way you know it is when they get people in finance to come and do projections. The minute there's projections, we are now not talking about strategy. This is not a strategy conversation anymore. Because what we're doing is we're taking what could be and we're eventualizing it into what we expect it to be. And it's a what is. It's a snapshot. Strategy can never be a snapshot. Doesn't work that way. So strategy is like the North Stars, like the guiding light. It's this place we're going. We're happy to get there. We don't know, must figure what the weather's going to be.
True.
That shouldn't be part of strategy. Finance is going to tell you when you get there, the sun must be up. And that's not the way it works. You're just going to go, look, we're going to go to Cape Town and kind of figure it out when we get there, what the weather's like. Where you're going to stay. We're not sure, but we know that we'll look for a hotel that has breakfast in the morning and air conditioning. That's strategy. Strategy is shaped like that. The minute you start going, it must be at this hotel and this must be the right. Now we're planning. And these are not the same things. So people, I used to do a lot of corporate work. And I'd go away on these strategy sessions with CEOs. And then I get there and it's nothing more than a plan. You're like, but guys, this is not a strategy. You're now planning. Right? And so it's very important to know those two things, because once you know what strategy is, you then know how to go through the strategy process, and how when you're done with the strategy process, you're never done with the strategy process.
And how do you know when it's time to go back to the core? Because in your book, you also talk about how you ventured into another division in your company. And then you realized it wasn't working and you remembered you went back to the core. At what stage did you realize that you had to go back to the core?
When you lose money. It's the easiest way to learn. The easiest way to learn is you got to burn your pocket. And you burn your pocket, you go, why did we burn our pocket here? We were in a, so, I'll give you an example. I'm watching Usain Bolt make this mistake now. Usain Bolt's a phenomenal sprinter.
Yeah.
Now ufuna ukudlala ibhola. Because he's convinced that because he can run, it means he can run and dribble a ball and wear soccer boots and shin guards and run for 90 minutes and have, I don't know, 11 other players from the other team trying to stop him and have a referee and a linesman. These are very different set of rules.
Yeah.
That you have a competence that translates doesn't mean your set of competencies translate into that environment. So when you know you need to return to the cause, actually very simple. It's typically when you burn your pocket. And you burn your pocket because the extension seemed logical, and then when you made the extension, it wasn't logical.
It wasn't
as
working.
you got there, you went, something doesn't work here, right?
Yeah.
The difficulty I think business leaders face is when they get into that environment. They remember, business leaders also have bravado, and arrogance, right?
Yeah.
Yeah.
So we're not keen to admit we were wrong, right? So if I take the wrong decision, I'm a CEO of a listed company. I've got shareholders who've been looking at what I'm doing. I told them 2 years ago we headed down this path. We went down the wrong path.
Yeah.
Now I've got to get up at the AGM and tell them we went down the wrong path. We're going to pivot.
Yeah.
They're going to fire me.
Yeah.
So what do? I'm going to keep going
Stick
down
with
this
the
path. Right? And then what I do is I externalize responsibility. I internalize reward. I externalize responsibility. That's the first sign of bad leaders.
Yeah.
Internalize reward, externalize responsibility. Anytime you hear leaders go, I did this, but the market is doing this, then you know you've got a bad leader. Because then they'll go, the market's wrong. There's a market downturn. It's them. It's never me. It's never us. But when things go well, it's very Donald Trump. It's look at how
I did
well
it.
I'm doing, right?
Yeah.
But I think that's where organizational context comes into place. You need to remember that little aspect.
Yeah.
And that's what business leaders tend to forget. We forget that little aspect of getting the organizational context right.
Yeah.
And I just want you to tell our listeners, what is that importance of having that little aspect right?
Yeah, so great question. So there's two aspects to the organizational aspect. The first is, as Simon Sinek, start with why. So know why you do what you do. There are a couple examples of this, but many people think that context is product.
True.
It's
That's
not.
actually very true.
Right? Context is context, finds manifestation in product. I'll give you an example. Durex, the world's largest condom company. You guys are students. Durex is the world's largest condom company. They believe that their organizational context is facilitating touch.
Yeah.
That's why they exist. It finds manifestation in making the condom.
Yeah.
One day, it might be something else. McDonald's believes that their organizational context is convenience.
Yeah.
It finds manifestation in making food quickly that you can buy and eat, right? So context isn't product. That's the first thing to say. The second thing to say, and this is where business leaders get caught all the time. This is why, by the way, universities train kids incorrectly, is simply this. A context shifts
True.
all the time.
Yeah.
So if you come in with a context for a point in time, you're going to be a bit like Cope, right? Because you're going to come into Parliament with a strategy for this thing. And then a new party comes of young people who wear red stuff and make a noise, and now you don't know how to respond. So what are you now, right? And then there's the other guy from the IFP who wears something on his head that just makes everybody's, state of the nation looks cool. And we're like, well, so where are we now? And where are we placed? Contexts shift all the time. The role of business leaders is to understand how that shift affects their leadership.
Yeah.
And that's the difficult part. That's the part that many people find hard to deal with, because remember, I'm in finance, right? So, but my job is just to balance the books. I'm just in debtors.
Yeah. That's what I do.
Yeah, that's right. And so that's why people get caught in that loop.
Yeah, and that is so true, because I went to Leader X at one time, and Judge Mervyn King was talking, and he was talking about how a lot of the millennials nowadays look at how the company is giving back to corporate social responsibility, and as an entrepreneur, do you see that as a core value any business should have? Like, let's say you're starting up a company, do you think you must also start up a way of giving back to the community at that point in time, or do you have to grow big enough to actually start doing that?
Yeah, so great question. Man, that's a good question. But I don't know when those things became mutually exclusive.
Yeah.
I don't know at what point we said, let me answer you this way. Of the fact that you exist means you're socially responsible.
Yeah.
Right. If you're not, you shouldn't exist. I just want to make the point.
Definitely.
And the reason is, if you're not socially responsible and you exist, sooner or later the conscience is going to trip you up. So this is the Ellerine story, right? Making people buy furniture they can't afford at rates at which they can't afford it, you're going to die. This is the African bank story, making people take out loans. That's just how it works. A business that exists to add value is already socially responsible. Of the fact that you exist means that you're bringing something to the market that the market needs at a cost cheaper than people in the market would otherwise get it. Because if you fix the price of bread, we're going to catch you.
Yeah, that's true.
You fix the cost at which you're going to build bridges, the market's going to trip you up too. So that's kind of how that works. So I don't see those two things as mutually exclusive. In my view, those two things are the same thing. You're socially responsible and you are a business.
And I think the problem with that is when shareholders come in, when a company, I think, is focused majority on the shareholders and not taking into perspective the other stakeholders involved. And that's where the problem comes in, where the company is just going to focus on increasing shareholders' wealth. So how do you find that balance as an entrepreneur when you're looking for someone to invest in your company and you're trying to keep them happy at the same time, but also trying to find your way in society to also give back as an entrepreneur?
Yeah, I mean, that's tough, right? I don't know if they do now, but in my day when I was doing finance, they didn't have a module on being a socially conscious human being. And it's interesting to me that we outsource that to society. We'll go, there'll be good people. They come from society, raised by two parents. They go to church. They must definitely be good people. And that's why you end up with the wrong people acquiring the right skills and using the right skills for the wrong reasons.
Actually,
right?
that is so true.
But if you are an entrepreneur looking for an investor, I have found actually, contrary to popular belief, the power lies with the entrepreneur, not the investor. Entrepreneurs give too much power away. So because you're looking for money, you're willing to give away too much. We do it. So I can tell you now, we're in the fundraising process. But a part of our fundraising, we have this thing called a social scorecard. And we're one of maybe 2 funds in the country that does it. So we go to our funders and we say to them, give us X, we'll return Y. Then we'll say, but we'll return Y plus Z. Do you know what Z is? When we invest in a company, we insist that the entrepreneur puts all the employees on medical aid and the employees have beneficiaries. What that means is I now shorten the queues at Baragwana. Now I'm just one fund. So I've invested in one entrepreneur that has 100 employees who has taken five beneficiaries. Now we have 500 people on a private medical aid scheme. Do you get it?
Yeah, I get it.
Where we invest, we insist that there's a certain level of education, quality of education that our entrepreneurs put their kids. So this is how you have to frame the conversation and question around conscious. That's why I said I battle when people go, there's social responsible and profit. These two things should never be different. If they are different, that says a lot about where we are as mankind. It's a very scary place that we've come to.
Okay. So we've come to the end of the show. Thank you so much, Vusi Thembekwayo, for your insight. And so I heard you're going to be selling books at UJ today.
I'm told so.
So to our listeners,
Ever the entrepreneur, we got to make them.
So to all our listeners who are around Melville and Auckland Park, if you want to get your hands on Magna Carta of Exponentiality, UJ is the place to be today. I promise you won't regret it. It's a good read. Thank you so much, Vusi.
Just before we go, I'm
Thank
curious
you.
from you guys, what did you think of the book?
It was great.
I enjoyed it.
Especially
I
from
really did.
someone both of us are actually doing our honors in accounting.
Right.
So for us, we're very involved when it comes to business. So it just brought this different perspective about business.
Right.
Provided a lot of insights, and I feel like a lot of aspiring entrepreneurs out there will benefit from it. So guys, please go get it.
Cool.
Thank you so much, Vusi.
Thank you.
Thank you, guys.
You're listening to brandlive.co.za.